This is Brother Dog's Finance channel, and today we are still going to give an update on our MRI model, the market regime identification model for next week, and a quick recap on the model performance during last week. Last week was still a good one for either SPY or Nasdaq. And for our model returns, last week we recommended the position in TQQQ, so it posted around 11.5% versus SPY last week around 2.5%. And the cumulative since inception for our model return is 16.6% versus SPY 3.4%. And I think I have already just typed here that biggest question currently for the market is that would the rally continue? And to keep it brief, our conclusion based on the MRI model is the answer is yes. We think there is a bigger chance for the market continue instead of the other way around. However, that as we highlight here, the persistent levels for the two ETFs, the major market index, is only 2 to 3% above the current level, meaning allocation into risky assets. However, we have to keep in mind the market may enter a overheat phase pretty soon, and that is where if SPY or QQQ they break these persistent levels, that may be the time we should consider to take some profits or decrease the overall risk of the portfolios. Let's get into the details quickly. That the MRI indicator for SP 500 index. Let's look at the highlighted area. No doubt the short-term moving average is still way higher than the long-term moving average, indicating the bull market trend is still going to continue. However, look at the difference between the short-term moving average, the red line, and the upper bound, the green line here. The difference is much narrower compared to a week or 2 weeks back. This means though the current market phase is expansion. However, once the red line cross the green line here, it's going to enter the overheat phase. And that is where we recommend to decrease any leveraged positions or decrease the overall risk of the portfolio. Similarly, for the Nasdaq 100 index, the difference between the short-term moving average and the upper bound is still pretty narrowed compared, especially given the current market rally for the last week. We think that the gap here is going to be minimized or even disappear very soon. So be ready for that. And quick summary here that all major market indices are still under the expansion phase, and our recommendation for next week is still the TQQQ here. However, we would still like to emphasize again these two persistent levels. SPY is currently trading around 450 versus its persistent level of 460. And QQQ is currently trading around 380 versus its persistent level of 390. So whenever the two ETFs hits these levels, that is the time you should switch TQQQ or the leveraged ETFs to just the ETF itself, like switching the TQQQ to QQQ. And that is a week ahead overview for MRI model. Hope you like it. See you next time.